And we are live. Well, live to tape. Remember those days, David? How are you? It's good to see you again.
Mark, I'm doing very well, as always. And how about yourself? I know you've been traveling a lot lately.
Yeah, it's been a very busy September, first half of October. Conference season gets back up in full swing. Was in Vegas and Palm Springs and Nashville, and I'm glad to be home right now. And making it even better
There
is
you
that
go.
I get to chat with you.
Oh, that's the bright spot of your day, I'm sure.
I'm being nice because I know you take pleasure in trying to find something to hit me with. So let's start off on a positive note. So let's talk about the eGrocery sales numbers for the month of September 2023. So what's the headline? Give it to me.
Well, I'll deviate a little bit instead of focusing right on the numbers, just put a little context for it. The headline is, households still appreciate shopping online for their groceries. However, increasing cost considerations are making these households who like to shop online make trade-offs between essentially the elements of cost and convenience. And with that, we did see a slight dip in sales in September, about 3%. And September is kind of following the seasonal trends that we've seen in the last few years, where sales pull back after the return to school month of August. So that's the top line, Mark.
So in the conversations I've been having with retailers at these conferences, and obviously they're focused more around the technology side of the business. You have, I guess, some concern about coming off the heady days of COVID sales. You know, we're looking at retailers, regionals who, if they're really performing well, are maybe getting 4 or 5% e-grocery sales. Most are probably in the 2 to 3 range, and they're all inquiring how do we double our revenue as percentage of total gross sales. So that's something that I wanted to bring up with you and get your thoughts on.
Yeah, and just be clear, when you're referencing those percentages, that's as a percentage of total sales.
Correct.
Right, right. And in our report, if we back out the ship to home and only focus on the contribution that both pickup and delivery in aggregate contribute, we'd be around 10%. So that's probably twice as high or even higher than what you mentioned. Obviously, in our reporting, as you know, Mark, we look at more than just the supermarket region, and that includes mass. And we know from our market share report that Walmart itself, excluding Sam's Club even, represents well over 1/3 of the total. So the other channels are what is clearly bringing that up, mass in particular. I mean, mass is generally north of 10%, probably closer to 15% of total sales. And it used to be even higher. So I think we need to kind of call that out just to put some perspective to it. And again, the trends are continuing to flow that way for a variety of reasons, which we can talk about. But so are you saying they're questioning the viability, or trying to understand what levers to pull to drive stronger growth than they're already encountering? I mean,
Yeah,
what are you
I think
hearing?
it's a question. It's a question of you can't put the genie back in the bottle, so they know that
No.
their customers continue to expect to be able to buy online, whether in a third party, first party relationship. It's convenience is, as you have noted several times, really driving the engagement here. So I think it's now a question of, okay, how do we make the most of this without incurring additional costs?
Sure. So I'll put on my retailer hat, and in private conversations, it may be even a sharper tone than what I'll take here in the public environment. But if you're online as a retailer providing this service to your customers, that's obviously an important part of your strategy to address the largest market possible that your stores serve. If you're online in multiple places and you have first party site, one of the questions you're going to have to wrestle with is what is the role that those secondary locations or sites serve within your broader, customer engagement strategy? And I'm really referring to the marketplaces. And we have seen some retailers who have actually exited all marketplaces so as to concentrate the demand or volume coming to their stores to their first party site. That's a consideration that most retailers are going to eventually need to make, especially when they look at the cost benefit of managing a first party site versus the incrementality that the third party marketplaces offer. And again, to be absolutely clear, and I know you know this, Mark, we know that the role of third parties extends beyond simply a place to sell online. You could, and in fact, many retailers have used third parties to provide very specific services within their e-commerce strategy. An example would be those who have been in food service for a while online, offering their own first party platform, but then fulfilling their delivery orders via distribution agreement with third party. But that's not the same as also being on the third party site. So I think retailers are going to have a day of reckoning where they have to look at all the things that they're doing online and understand what the respective value is for those different touch points. Because obviously the more places you're available online, the easier it is to buy from you. But at the same time, the more places that you're available, the greater chance you're diluting the pool that's really being funneled into your first party site.
And I'm glad you picked up on it, because that's the trend that I'm seeing right now. Is you're getting a lot of regionals wanting to play in every marketplace, including Amazon. The risk there, because at the same time you're getting retailers who want to understand how they can maximize the loyalty of their shopper base. It's a little difficult if you're driving them to a third party, or if they're finding you via a third party.
Yeah, so I remember having these conversations in 2017 with retailers who were at the point only offering delivery, and then they were asking the question, well, what's the value of moving into pickup? Are we just going to cannibalize sales, or what's the incrementality? We answered that question long ago, which was you need to be in both to serve the largest addressable market in your trade area. Then the question morphed into, okay, we're now in delivery and pickup on our first party. We're now looking at the value of moving into third party. And again, cannibalism versus incrementality was the issue. Obviously, extending into those marketplaces broadens your reach. And in theory, broaden your reach means you attract more customers. But we need to keep in mind that if someone's on a marketplace and they're shopping with you or me, Mark, there are customers, because they know us, and we know most customers who are online shopping have been a customer of that retailer or that banner in the physical world before the digital world, for the most part. There are exceptions to that. So, what we would then look at is, well, if our customers are not shopping on our first party site, but rather a third party, is it that they don't know, they're unaware that we offer our own first party, or they haven't seen a benefit for switching? And then we start to get into other considerations about our pricing strategy between first party and third party as a way to, again, funnel the volume and traffic to our site, because those eyeballs, those customers, that volume is really critical for building enough scale to support and sustain the type of execution that customers have come to expect in the store. And that's what they're getting in mass right now, because mass has the volume to support the staffing levels to drive excellence in execution when it comes to the last stage of distributing an order, whether it's for pickup or delivery.
Yeah, it's and I appreciate you providing that nuance there. Let's prognosticate just a little bit. There's some considerations. One, all the pandemic savings that were created have now presumably been dried up. You have the end of the government disbursements. You have relatively still significant inflation. Where do you see the next quarter unfolding in terms of online sales? And
Well, I think in terms of just looking forward, we have our forecast, but in terms of the next quarter, the very near term, our expectation is the headwinds are only going to get stiffer, and they're going to get stiffer because now October is upon us, and the debt forgiveness that had been paused during COVID is one of the last COVID-related financial supports that has now sunset. Obviously, the details still to be determined because the Biden administration has now gone a second time to forgive some debt for a sizable number of households, not as many as it was before. So the impact of that is yet to be seen. But when households now have to figure out where they get the $200 or $300 a month that they weren't, mailing off to repay their college debt for the last 2 to 3 years, that's going to cause pressure. And one of the things that I looked at this morning, Mark, was the poll survey from the Census Bureau. And if you looked at non-SNAP households versus SNAP households, and the response to the difficulty in paying household expenses, so groceries, mortgage, debt, whatever it is, non-SNAP households is about 13%. So 13% of SNAP households say they're having a very difficult time. If you look at SNAP households, over 42% of those households are having a very difficult time today doing it. So they're over three times more likely to be facing financial distress today compared to those non-SNAP households. So clearly something's got to give. And again, grocery has a degree of a moat around it in the sense people got to eat, right?
yeah,
But we have seen shifts in the way people eat, eating more at home, buying their food at different locations, buying different brands, waiting to buy certain things when they're on deal, things like that, or increased use of various type of other discounts or deals, whether they're digital or physical coupons in that. So we would see the next quarter just being a little bit more of the same that we've come into with stiffer headwinds. That's going to be most likely a positive for mass, in particular Walmart, but it's not necessarily good for all value retailers. I mean, Aldi and a hard discounter is doing very well in this environment, but others like dollar stores, they're struggling. And part of the reason is the demographic mix of their shopper base.
Is there anything tactically that a retailer could do to take advantage of the upcoming holiday season?
We know that there's increasing pressure to make trade-offs between convenience and cost. We know that a lot of households, in fact, more households, still appreciate shopping online. They're just tweaking their behaviors in the form of lower order frequency and order values. But what retailers could do is continue to emphasize ways to help their customers save money. Now, in the end, that doesn't necessarily mean that you're trying to get a basket of goods delivered to your customer at the same price as Walmart. We know that's not going to happen. What we simply mean is make sure there is enough opportunity for these customers who are a little sticker shock because of the ongoing inflation and their kind of cash strapped focus to stretch a buck, offering those digital deals, those BOGOs, or other incentives that may reward them for shopping with you. So this can go into loyalty rewards, or also emphasizing that shopping in store is obviously the lowest cost option. It's the one that's most economical. But before you do that, if you're really focused on building online, is really start to promote or emphasize pickup over delivery because of the savings that are accrued by not having to pay the service charges or the higher delivery fee versus pickup or the gratuity. So those would be those things. But even beyond that, I would say if we're talking to the regional grocers, it's emphasize quality product and quality service. That's the differentiator that you have versus the mass competitors, and really try to showcase those items. And some of that may be in your prepared meals or prepared foods or in your other perishable departments. And, those are the things that you have. And by focusing on pickup versus delivery, you play to the strength that you have in convenience, because convenience has been connoted with convenient location in the physical world of grocery retailing. And when you focus on pickup, that same element comes right back. Whereas if you're focused on delivery, prioritizing delivery over pickup, you're really mitigating a competitive advantage you have over a big box retailer who is maybe miles away from your store location.
Yeah, great comments, great insight as usual. Let me ask you, anything surprised you in the last month, whether in the report or just in the industry overall?
Well, what continues to surprise me is just the ongoing surge that we're seeing flow into the mass channel. And really by that, I mean into Walmart. It surprised me so much that I had to really dig deeper outside of our research into Walmart's metrics to actually see that they're reporting very similar growth rates in terms of new customers and sales driven by, pickup and delivery. And I think the other part that's probably under the radar now is that Walmart is increasingly distributing their delivery orders through their in-house first-party service, while still strengthening their Spark program, which is their third-party distribution service.
Right. Interesting. It's going to be an interesting next little few months as we get into the holiday season. I'm anticipating a renewed interest in online as people become more time strapped. So that will unfold. I also want to plug something that we're working on. Well, you're working on. Mercatus is happy to support is the benchmarking program. Do you want to talk about that briefly?
Yeah, so we've been inviting a select number of regional grocers from around the U.S. to participate in this year's benchmarking initiative. I'm happy to say we're over 20 banners in so far, with just some, final invitations going out to a few other regionals. And we're going to be reporting the results at the end of November. So this kind of builds off some of the work we did, was it a year or two ago?
Yep.
And we're looking forward to updating that because, as we look at this is our best way of looking specifically into the supermarket channel, and in this year's focus, the regional grocer sector of the supermarket channel. Because unlike past years, we're not including independent, single store operators this year. So for those regional grocers who are, really asking a lot of the questions that you raised at the beginning, Mark, this report will be probably the most pertinent data source for them to compare how they're performing, as well as to potentially identify ways to improve the business, whether it's in customer acquisition or customer retention, how to build average order values or order frequency. And again, we're going to look at it from the business standpoint. So we're very focused on key business questions that we believe are extremely important for regional grocers to ask themselves, examine, and ultimately decide on how they want to move forward. Otherwise, we'll be having the same conversation in a year from now.
Yeah, we're super excited to help bring this to fruition. And any regional grocery executive out there who is listening, wants to participate, then by all means, please reach out to David directly or myself, and I can put you in touch with David. As always, pleasure speaking with you, and look forward to chatting with you next month, David.
Thank you very much, Mark. Have a good one.
Bye-bye.